Imagine a tax strategy so potent, it's practically a secret. A strategy that transforms your business meetings into vacations, your dining into deductions, and even your gadgets into tax write-offs. Picture this, a getaway with your favorite people, all while slashing your taxes. Are you intrigued? But wait, there's even more. This isn't just about taxes, it's about fortifying your asset protection, triumphing over potential IRS audits, propelling your business into new heights, and locking in your commitments to your business goals. And the key to all of this, it's simpler than you might think. In this video, I'll be introducing the Board of Directors strategy. And I hear you might be saying to yourself, I'm just a small business, or I just have an LLC, there's no board for me. But here's the revelation. You too should have a board. And in the next few moments, I'm diving deep into the nitty-gritty of this game-changing tax strategy. And so by the end, you'll have a crystal clear grasp of how it all works. So buckle up, because we're about to unveil the strategy that could reshape the way you do business. So let's dive in. So I was recently asked to speak at a Tax and Legal 360 event. This was a 3-day event with attorneys and CPAs and other tax professionals, as well as even business owners. And I presented on the topic of the Board of Directors. So I'm gonna actually share that presentation with you today. So I've done a little condensed version for purposes of kind of putting this on social media. So let's dive right in. Let's talk about the Board of Directors. Hopefully you kind of understand the big picture here by the introduction I gave you a moment ago. Basically what I'm saying here is you can establish a Board of Directors for your business, no matter how small it is, and be able to take advantage and leverage some of these other tax strategies. So envision going on a business trip, right, which includes some personal vacation time with people the closest to you, right? Those could be your best friends that might be involved in your business in some fashion, or perhaps they have a business of their own and they can help you with things and you can help them with things. I'll explain and expand on more on that a little bit later. But all your travel, lodging, dining, all these different things can be deductible. So let's jump in. Let's talk about what this Board of Directors is, okay? I first want to start off and say that any business can have a Board of Directors. If that term, Board of Directors, is traditionally thought of as like a corporation, right? But if you have an LLC, then you can use the term Board of Advisors. But if I say Board of Directors later on in the video, I'm kind of using the terms synonymously, okay? So let's look at the different entities that can have a board. I'm saying you can have a board if you're a sole proprietor, even if you haven't formed an LLC yet, okay? A partnership, a corporation, you could be a real estate investor. You can even set up a Board of Directors if you're a solopreneur. So if you haven't heard of that term before, I'm just saying it's you're the only one in your business, you're the only employee, if you will. You can have a Board of Directors or Board of Advisors. And so here's sort of a visualization of that. I'm saying no matter what type of entity you are over here, even if you have rental property, you can establish a Board of Directors or Board of Advisors for your business, all right? Doesn't matter what kind of business you are. Now, where is this documented, Nabi? What is this Board of Directors you're talking about? Where do we actually have, documentation that supports this? Well, the creation of your board is going to be, or I should say where it's located is going to be dependent on the type of entity you have. So if you don't have an entity at all, this will really just be an internal document that you kind of have in your own records. But otherwise, if you have a corporation, so I'm saying you went to your state and you formed a corporation, an Inc., if you will, then the provisions regarding the duties of the Board of Directors are set forth in the bylaws of the corporation, okay? And if you have an LLC, then what would happen is an attorney would work with you and create a provision for a board within the operating agreement of your LLC. So right now you might be thinking to yourself, and I know this is you, right? If you're watching this, I'm sure this is you. You might be like, oh, Nabi, well, all I did was, went to my state and formed my entity. I don't really have these different things, meaning I don't have bylaws for my corporation and I don't have an operating agreement for my LLC. Well, if you do that and you sort of cheap out and you don't get the proper documents that you need, then you're not going to really be able to leverage this strategy the way you should be, okay? So my recommendation, if you'd like, you can shoot me an email. My email is navi@navimuradcpa.com, and I can maybe introduce you to an attorney that will help you set up these things. Even if you have an LLC already, they can help enhance it, set up an operating agreement or bylaws for your corporation. Okay, so that's where it's housed, all right? You'll also, and I'll talk about it here in a moment, is now that you have the Board of Directors, when you have these business meetings, you'll have a place to record all the discussions that you talk about. Those are called meeting minutes. I'll touch on those here in a second, all right? So the 5 reasons why you should have a Board of Directors. Number 1, I already mentioned this, but tax write-offs, right? We're gonna expand on that. It's gonna be the big chunk of this video that I'm producing for you. But tax write-offs, asset protection, I hinted at that at the intro, audit protection, strategic expertise outside of your own proficiency. I'll explain what I mean by that. And also it can be sort of an accountability to achieve your business goals, to help hold you accountable to make sure you achieve your goals. And again, I'm gonna expand on all of these here in a second. So let's take out on tax write-offs for a second, okay? I'm saying that you can get a deduction for all your travel, that includes your lodging, airfare, Uber, all that stuff. your dining and your meals, and even like electronics that you're purchasing as a result of the board of directors and recording those meeting minutes, right? So all of these things are will become ordinary and necessary for your business. So not only are you getting a tax deduction for this, but you're also going to be making your business better at the same time. And you can see what I'm highlighting here is, to the extent you have a great relationship with perhaps some of your closest friends or some of your family members, and it makes financial sense or it makes business sense for them to be on your board of directors as members, then you'll be able to travel with them too and get a write-off for all of that, okay? So it's a pretty impressive strategy if you execute it properly. Let's talk about asset protection for a moment. So what's gonna happen is you would meet at least annually with your board of directors, and you will record what's called meeting minutes. If you haven't heard of that term, meeting minutes is basically just, if you're having a meeting and you're just writing some notes, then what you'll do is you'll actually officially record those notes in what's called meeting minutes. So you'll open up a Word document and just start typing up the meeting minutes, and then you'll incorporate those meeting minutes in your own, personal records. You won't put this on the web anywhere, but you'll include that with the other documents that you have related to the business formation of your business. So along with your articles of organization and your operating agreement or your bylaws, you'll actually have your meeting minutes located in that folder, if you will, there too. All right, and these meeting minutes are going to include the actions of the company, what you discussed during that meeting. So the note here is, don't just conduct the meeting, right? Document it in order for you to protect the corporate veil. And meeting minutes are a private document. They're not a document that you have to file with your state board or with the IRS or anything like that. Audit protection, the third reason why you're going to have a board, is so that you can enhance the sort of audit protection that you will be receiving. I guess I should word that a little bit differently. I guess what I'm saying here is, by having a board of advisors and documenting things in your meeting minutes, you'll actually get audit protection in case the IRS questions some of these things. So as an example, you're going to have updated minutes, and these minutes will ensure that there aren't any variances between what was formally documented and what is actually occurring. So what I'm saying here is, if you don't meet with your board of directors once a year, things change in your business, right? You might discuss things and incorporate things in your business in year 1 that are no longer valid in years 3, 4, and 5. So by having your board of director minutes, you'll be able to document things that are changing in your business related to IRS regulations. For example, you might elect to take certain tax elections. You might elect to adopt an accountable plan for your business, right? An accountable plan, if you've never heard of that term, is a way to reimburse employees for their expenses. Quite often, if you're an S corporation owner, you are the employee of the business, and therefore you are going to submit a report to your S corporation in order to get reimbursed for expenses. Expenses like your home office, cell phone, internet, and your vehicle are probably the top 4 most common things that you should be reimbursing yourself through an accountable plan. If you haven't heard of an accountable plan before and you're an S corp owner, you need to kind of get educated on that because it's important, and you probably should have one in your business. Number 4, strategic expertise. So I'm saying board members that you invite to have on your board should excel where you might have some blind spots. So let's use myself as an example, okay? I'm a CPA, but that doesn't mean I'm good at social media or marketing or growing my business, or I'm not a real estate investor. So like, if I want to do things related to real estate, I should probably have someone on my board, maybe like a real estate agent or something, that can help me with this. What about if the opposite problem of growth? What if I'm ready to sell my business? I might have someone on my board that can help me start planning for an exit opportunity, okay? So all I'm saying is, we as business owners, we don't know everything. In the beginning, we have to wear all these hats, right? Because we can't afford to outsource some of this stuff. But as your business gets more mature, you can invite other people that have strategic expertise where you have those blind spots. So for example, let me give you another example. Let's say I'm not very good at marketing and social media, right? I can have someone on my board who's an expert at that, and in return, I can be on their board to serve as someone that can help with tax planning or tax strategies, right? That's just one example. Next, which is the last reason here, is accountability, okay? So board members can help you keep yourself accountable and attain whatever your 1, 3, 5, 10-year goals are, okay? Let me tell you, it can be challenging, especially if you're a solopreneur, to hold yourself accountable for an extended period of time without others kind of looking in and looking at what you're doing, right? So I'm saying, if you have people on your board that care about you and your business, during these board meetings, you would be having discussions about what are the key performance indicators that are important to your business. And those board members, every time you meet, can help keep you accountable. Hey, did you meet those indicators that you said were important and were key to your business, right? And I have a slide about that. These are the various things that you can do during a board of directors meetings, right? So you can host trainings, review those key performance indicators, discuss obstacles and help problem solve, receive guidance for someone who's an expert in an area that you have a weakness in, share or update sort of your strategic plan or your marketing plan, bounce ideas off these people, right? And then create an action item list or, takeaways, if you will, that you're going to be doing so that the next time you guys meet, right, you're creating a business purpose for the next time to meet, wherever you're going to be traveling to or hosting this meeting, you will have these items there, okay? So that's sort of the board of directors. And follow along with me, right? I don't want to lose you. Next, I want to talk about dining. So why am I talking about dining? Navi, I thought you said this strategy was related to board of directors. Well, when you go on this trip, right, not only are you going to be able to eat, but I'm going to actually show you here in a moment how to write all this stuff off. So your lodging, your airfare, all that stuff, okay? Let's start with dining though. Let me give you some rules about dining. So there are meals expenses that are 0% deductible, 50% deductible, and 100% deductible. So let me kind of show them to you here. 0%, those are meals by yourself when you're not traveling, okay? So I'm gonna show you here what I mean by that here in a second. But I have a lot of real estate agent clients, okay? If they're just driving around their local community and they're grabbing something to eat because they've been out all day, that's not a tax deduction. You can't go to Starbucks and get a tax deduction by yourself, okay? Now, if you meet a client there or a vendor there or something like that, then you could. Meals at an entertainment venue that are not separately stated on the receipt. So if you go to, let's say, a football game, right? Football season's about to start back up here. I'm sure you're excited about that. If you buy tickets to the game, that's not gonna be deductible, right? That's considered entertainment. It's no longer tax deductible. However, if you go to that game and then you purchase food and beverages, well, those might be tax deductible because they're separately stated on your receipt. They will not be counted as an entertainment. Rather, they would be counted as a separate meals expense, okay? So try, whenever possible, to get those things separated on a receipt. 50% deductible, that's the next topic. So meals by yourself when traveling, okay? You notice the difference here. Meals by yourself when not traveling, 0% deductible. But meals by yourself when traveling for business, 50% deductible, okay? Meals with a client, prospect, or vendor. Meals with a board member, right? We just talked about the board of directors. So you have people on your board that are strategic to your business. Anytime you might meet with them locally, even not if it's at the board meeting, you can now deduct that meal. Meals with an employee. Office water, coffee, or snacks that you have in your either home office or official office, meals at a seminar or a conference, and then meals for the convenience of an employer. So here what I'm talking about is let's say you have a bunch of employees and you need them to get some stuff done, so you're going to pay them some overtime and you're going to order meals in so you don't really mess up the productivity or their workflow that they're currently working on to have them leave and then come back into the office. Well, if you do that, those meals are only 50% deductible, not 100% deductible. But speaking of meals that are 100% deductible, let's cover a few. So if you have sort of like a team building event, think like an office holiday party or a picnic, the meals that you sort of cater in for all of that can be 100% tax deductible. The key thing there is make sure that the people in attendance doesn't grow over 50% that are non-sort of business owners or non-employees, okay? As soon as you have too much friends and family at that event, then that's not gonna be 100% tax deductible anymore. Food offered to the public or customers for free. So I'm saying if you have like a food truck or a restaurant and you're handing out food, that could be 100% deductible. And then meals sold to customers as cost of goods sold. So I'm saying, again, restaurant type of business here, food truck type of business. Obviously, the food that you purchase is kind of like your inventory and you're selling that inventory. So that's going to be 100% deductible. But the point here, as it relates to board of directors, is people on your board, you can deduct their meals. And when you yourself are traveling to get to your board of directors meeting and you're by yourself, right, you can now deduct those meals as opposed to meals that you were having by yourself when you're not traveling for business. Okay. Here's a quick bookkeeping tip for you as it relates to dining. A lot of software out there will just have a generic meals expense account. But you just learned that there's different categories for meals, right? There's 50% and 100%. So you should get with your bookkeeper, or if you're doing this yourself, you should create sub-accounts under meals that have a 50% category and a 100% category. Why is this kind of critical for your business? It's because I can tell you right now, if you lump everything into one generic meals category, your tax professional is not going to call you come tax time and ask you what percentage of this of these meals or what dollar amount of these meals are 100% deductible versus 50%. Okay, you're not going to get that phone call or that email. They're just going to dump all of it into 50% tax deductible, and you're going to lose out on some tax deduction. So that's just a little tip for you there. All right. Now, let's talk travel for a moment, okay? What's included in travel? When I say travel, what does that mean? Well, I'm talking airfare, hotel, Airbnb, VRBO, Uber, Lyft, taxis, rental cars, okay? Tolls, valet, public transport of any kind is gonna be deductible when you're traveling for business. Okay, what about these two things I have an asterisk here for? Well, normally these items are not tax deductible, right? Dry cleaning is not tax deductible normally. However, when you're traveling for your business, all those clothes that you're gonna wear, go ahead and get them dry cleaned while you're away on business so that you can maximize the tax deduction related to that. So, if you've got, jackets or suits or dresses or anything like that you're wearing, go ahead and get those dry cleaned while you're away on vacation so you can get a tax deduction for it. And I already mentioned meals by yourself when traveling is tax deductible. Okay, let me show you kind of how to like strategically plan your vacation. So again, I mentioned at the onset that I was discussing this at a tax and legal conference. It's called Tax and Legal 360. Maybe I'll put the description in the bottom of this video, depending on what platform you're watching on, so that you could check that conference out if you're interested in learning all the various tax strategies and legal concepts. Okay, but basically this event was Wednesday through Saturday. Okay, so I traveled in, right? I flew in on Wednesday. We did business Thursday, Friday, and even Saturday, believe it or not. And then Sunday, I flew out. Okay, now under this scenario, since this whole entire trip was business, I can deduct everything. What I mean by everything is I can deduct everything on this slide here. Okay, so I can deduct my airfare, lodging, and meals. Okay, let me show you what I could have done and what I would likely do in the future is I'm going to sort of incorporate what I'm coining as the weekend loophole strategy. Okay, this is sort of a powerful strategy related to traveling. So look at what I did here. I've got a week. The week goes from Wednesday to Tuesday. Okay, and I'm saying on Wednesday I traveled, and I strategically traveled in the morning. I caught a very early flight and landed at my destination still, in time for lunch, let's just say. Okay, well, the IRS counts it as a travel day. Okay, so I actually can just book that as a travel day, and I can do whatever I want for the remainder of the day. Okay, so I can kind of turn that as into like a personal vacation in the afternoon part of the day and deduct my meals and all that stuff. Now, I conducted business on Thursday and Friday. Okay, so you're going to continue to conduct business, right? Let's say it's 4 hours of business. Now you can choose to do at least 4 hours of business on Thursday morning and Friday morning, and again, the IRS kind of considers that to be a business day once you conduct at least 4 hours of business. So the remainder of the day you could spend with friends or family who may or may not be on your board of directors. Do you see where I'm going at with this? And so you kind of have half the day to yourself. Saturday and Sunday, you noticed here, I'm providing this as personal, but I've got a green check mark here. I'm saying that you can actually write off your vacation on Saturday and Sunday. Okay, so what I mean by write off, I'm saying all your lodging, all your meals, all those other travel expenses, those are deductible. Why are they deductible on the weekend? It's because on Monday, you were required to do business for at least another 4 hours, right? So the way your trip was sort of planned is you met with clients and vendors or your board of directors on Friday, and you had another meeting on a Monday. So the weekend was bookended by business travel. And so as a result, the IRS says, hey, you get to write everything off on the weekend. And on Tuesday, if you would like, you could strategically catch a flight back, let's say in the afternoon or the evening, and sort of have your personal vacation, if you will, on Tuesday morning. Okay, so if you do the math on this, you could basically get almost 4 full days of personal related stuff, right? Because you strategically planned your business meetings and all that. So you can kind of turn your business trip into a tax deductible vacation. Let me show you what not to do. For you golfers out there, I'm kind of calling this the tax trap, right? You might hear that term called, sand trap. I'm calling this tax trap, right? If you look, I changed the order of the days. I've got Sunday through Saturday listed here. But basically what I'm saying is if you don't bookend your weekend with business, then you can't deduct those 2 personal days, right? It's the same thing here that I've got on the screen. We've got 7 days, but the key difference is that we didn't bookend the weekend with business, okay? And so we changed the days that we were doing personal activities on, and as a result, you're then gonna have to prorate all those expenses. So not all your lodging is deductible, not all your meals, not all your airfare, all that stuff, it's not gonna be deductible. So, you wanna be strategic when you plan your board of directors meeting or other business travel that you're doing. International travel, a lot of people wanna go international for business. I just want to let you know there's a whole bunch of different rules related to this. You can read this publication. It's IRS publication 463. Long story short, the rules are not the same as they are for domestic travel. So just be wary of what's going on. It doesn't work exactly the same. There are 4 exceptions to sort of the generic rules out there. I'd recommend you watch that or read that publication where it says international travel. That's a subsection of this IRS publication if you want to learn more about international travel. And so that's really all I got for you. I really appreciate you watching. If you're the first time watching, my name is Navi Miraj. I'm a CPA that teaches entrepreneurs how to save thousands of dollars in taxes. I do that by giving away free content here on social media, but I also do it through a course. You can find the details of that course on my website, which is navimirajcpa.com. So in there, I have more than just 20 minutes with you. I've got a lot more time to teach you other strategies, right? Like how to save over $66,000 in Roth dollars in your retirement account as a business owner, how to write off more things than just the travel and the board of directors, how to write off your health insurance, right? How to hire your kids in your business, different strategies that you can incorporate that help you save thousands of dollars of taxes. So if you're interested in that, again, go to my website. It's navimirajcpa.com. But with that said, I will either see you in the course or in the next video.